this morning. Ajay, it's always good having you. And
Thank you. Good morning.
It always promises to be a very candid chat when I know you're here. So, so I'm looking forward to this. But Ajay, talk to us about developments globally and how you're seeing it. The US seems to be in a tight spot, right? This West Asia conflict doesn't seem to be resolving itself in a jiffy. How are you seeing the developments there? And how are you positioning yourself to the developments that are playing out over there?
Harsh, good morning. I love when every Indian comes up to me and says, and you are saying the same, US is in a tight spot. I would love every country would want to be in the tight spot where their market is at historic highs, unemployment is at historic lows, the country is prosperous like nobody else. It's got its 70% of market cap of the world, and we still decide to say they're in a tight spot. That's what I'm saying. We have to get out of the habit of saying, other than a tight spot. No, he's not in a tight spot. Americans are doing best they ever have done in their lives. NASDAQ is at historic high. They got 4 trillion companies out there. I think they're doing wonderfully well. And then I think that's where the dialogue goes wrong. That they're in a tight spot. No, they're not in a tight spot. They're doing remarkably well. We need to go and find our spots and say, and I'm sure the government is taking some action. We saw yesterday's cabinet meeting to get us out of the tight spot. We are in a tight spot with the currency down, unemployment high. You've seen this whole social media thing where it ends. We don't know about this youth movement coming out, etc. So, so I think the narrative, we have to narrative and get out of this thing called, we're doing well, others are doing badly. No, others are doing very well. We are doing badly. We need to do what we have to do to correct it. So broadly speaking, the global construct is good. Yes, the Middle East war is there, but those have de-risked themselves into different industries. It's a cliched now, whether it's a semiconductor, whether it's a chips, whether whatever it is, they have done a decent job doing it. We haven't, and we need to do that task ourselves. So I think India has got an uphill task. We can do it, and I think we should all get together to do it. The only thing is, we need to take the economic dialogue out of a political context. I think that's the most important one. And if we can do that, we can do it. But let's start from the premise. The world is doing quite well at this point of time. We are not.
Where are we on the AI trade, Ajay? Because yes, the world has done extremely well, point taken. But a large part of it is because India hasn't played the AI trade as much. Where are we at with regard to the AI trade? The valuations seem to be skyrocketing. Do you believe that those valuations are warranted? Where do you sit in terms of your view there?
See, the view is very simple. First of all, you can't be out of the trade. Okay, yeah, prices can go up and down, but at the end of the day, those companies have got monopolies. So you got to be with them. That's one. India will be an adopter. So it's not that India will stay out of the trade. India will come into play at some point of time because all our companies need to be getting to implement AI. Somebody's got to do the implementation in India. We're going to be implementing side. Number 3 is the fallacy that it's only, yes, NASDAQ is highly concentrated, but so is S&P at a high, so is Dow at a high. So if you look at the industrial companies in America, whether it is a Caterpillar, whether it is a Walmart, whether it is the defense companies, I think there's a whole host of stuff which is doing well there at this point of time. It's just not AI. AI is focused on NASDAQ. For Indian context, I think the key thing for Indian context, and I think that's the most important, is that the AI will be great for some set of companies. I think for banking industry, it will be a game changer for us. The margins of banking industry is going to go through the roof. What happens to unemployment? I'm not going into that. But the fact is, adopt AI in India, and we can be a far more efficient economy, and Indian companies will, in a longer term, give margins that we have not seen for maybe a decade or so. So to extent, I think AI trade is great for India, because once you implement it, your cost efficiencies are going to give you the margin uplift you have not seen. And banking stands the first one to get the uplift out of it.
Very interesting, Ajay, because the last conversation I had, you were bearish with regard to banks. Has that view turned, and are you buying banks at this point?
See, bearish and bullish is all about the industry sector broadly. But yes, there are pockets of companies which have done well in banks. We're invested in them. The reason we were bearish and we continue to be that our monolith banks, these have not performed. They have got somnolent management which don't do anything. And you saw the chaos, and HDFC Bank, the leading bank in the country, continues to go into the problem. And for 5 years has given no returns to them. That's one. Number 2 is, in a scenario that we are in, this artificial interest rate reduction is not helping anybody. And we've seen it. The rates went down by 1%. Sovereign yields never collapsed. They, in fact, went up. And the banks are doing worse than they were doing on the 1 year back when interest reduction could play. So a point to banking industry, that point for 2 years has been that the regulatory setup doesn't allow them to do much, and our bigger banks are really floundering at this point of time. But they have an opportunity. And it's not about being bearish or bullish. It's about being opportunity. Just like your IT companies, they had a great opportunity. They blew it for this country. Banking has a great opportunity to be the front leader of technology, adopt AI, make India more efficient, and give returns to shareholders. Now, whether they pick it up the gauntlet and do it is a separate issue. The reason I'm optimistic is not because the volume will change dramatically or the companies will start doing very well. Is the ability to reduce cost is now staring in their face. Whichever bank takes it, I think will be a winner. Therefore, one sector, most intensive labor, is banking. You go to the branches, you call up the call centers, and you have to deal with the agents, etc., etc. Can you imagine they collapse it and they use the AI? Their margins would be what at this point of time? So I think it's not about just environment, it's about whether they do it. I think that's a key question Indian investors are going to ask.
Very interesting. And private sector banks, therefore, will be better placed versus the PSUs, Ajay. That seems to be the indication as well.
I wish I could say that. Sometimes I wonder, and I have not been able to get an answer from anybody, why are PSU banks' valuations so low? One would argue against them that private banks will do better, and some will do better because wherever foreign investment has come in, they will do better because the slave masters are going to ensure the management does what it needs to do to produce the results. So I'm quite sure 3-4 banks where money has come in a decent kind will do much better. But PSU banks, you can't argue the logic because the P's are so horrendously low. I just sometimes wonder why, but I guess it's just one of the things that ownership of government leads to discount of this kind. So I'm not arguing against PSU Bank because at this valuations, maybe you can never go wrong, but you may not make much returns, but you certainly won't go wrong.
Interesting. And you don't believe that the ECL norms which will come in will impact profitability there, or do you believe that that's a risk you're willing to live with?
I think let's see when the norms get implemented. Right. I think the macroeconomic situation has changed quite dramatically in the last couple of 12 months or so. So even if they do, I don't think that's an issue because ECL norms, you can put one more norm in terms of safety, security of the bank. So I'm not sure that is going to impact so much in terms of valuation of the banks because it's not money going out of the system. It's just that you are able to do less business because your part of your capital gets earmarked for ECL. But I doubt it that this will get implemented in a hurry. Even if it does, I think they will grade the implementation over a period of 3-4 years, allowing time for the banks to adjust. So I don't think it's a material development as far as investors are concerned. Our view, more important is what happens to the interest rates. Most importantly, what happens to the cost structure of the banks and how do they compete in a market where the economy is slowing down.
And Ajay, last piece, what else are you finding interesting in a market like this with regard to India? Or are you just finding markets abroad far better from a risk-reward perspective even now?
See, it's not a risk-reward. What's happening is the allocations. Most Indians' allocation is almost 100% India, And unfortunately, and this is where the policy problem comes in, we keep putting a cap on what mutual fund can invest in overseas. Today, there are barely 2 schemes open for mutual fund to invest. Now, imagine 3 years back, if it let it open, Indian mutual fund would have actively participated in the global AI trade and India would have participated through our investors. And our valuation would have been much less, which allowed the foreign investor to take the money out of the country. So I think we are just catching up on our investment. Whether it's the right time, wrong, I do not know the answer. But the answer I know is that you can't build your future portfolio for your children or for yourself without having access to some of the companies that are there. And, new companies keep coming up. Just now, Cerebras came up. It's a new chip company out in America. They keep coming up. So there are new companies, there are new things. But the point is, can you look at your future of your investment and say, I want to be 100% in a market which is 4% of global market cap, away from all the later themes. That's why it's not about risk return. I think it's all about allocation. We need to open up the mutual funds and say, please go invest how much you want to invest. Let Indians participate in global boom, which they have been, kept out of because of the artificial gap or cap on mutual fund investment. So overseas, answer is thumbs up because we just have to allocate more capital to overseas.
All right, Ajay, got to cut this conversation short. I can go
Thank you
on,
very much for having me.
but thanks so much for coming in and speaking to us.